Welcome to HowStreet.com Radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Marchese, mining analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, Chris, and happy Thanksgiving in the States.
Happy belated Thanksgiving to you too, Jim.
Well, I think we had sushi for Thanksgiving this year. We spared a turkey, but some salmon and tuna paid the price. Well, we're talking about gold prices and what's going to happen there and what the future might be. Right now, the market's kind of flat. It doesn't look very exciting, but a news release just came out. And Chris, what did it tell us?
China imported 130 tons of gold in October, which is huge. And it's likely to be even more in November and potentially December as a lot of people start buying their holiday gifts for the lunar holidays, in which gold and silver are big items on that list.
If there's been such a big demand for physical gold, why haven't the prices gone up?
As we've talked about, the paper prices determine everything. And until the physical market becomes so tight, the paper markets will control the price. But the markets always win out in the end. That's why, our short-term outlook, at least for December, is not very pretty. I mean, I think we're going to test the June lows for gold and silver in December. And my personal view is there's a very real possibility that we could break it in gold, and we could see 1,000 to 1,050 gold price just in December. But I do think the silver will hold the low, just because there's much tighter on the supply side, and the gold to silver ratio is trading already very high at 63 to 1.
Well, if you're mentioning gold prices going down to $1,000, the cost of production is said to be about $1,200. You can't afford to take it out of the ground for anything less than that. So we're going to see a lot of miners, shut down for Christmas?
I don't think so. I think that low price in 1,000 to 1,050 area will be intraday, and within 2 weeks following that, we'll be back up in the high 11s, low 12s, or even higher. And that's assuming that does happen. We could very well hold the lows set in June.
Everybody keeps waiting for gold to break out. I think maybe perhaps this is the time to buy then, because it's probably not going to go much lower than what it is right now. And the possibility for it to go much higher if the market's correct are much greater. So is this a good time to perhaps purchase gold?
It's definitely a good time. Not to say everyone should buy, all at once. Just do it on, a dollar cost average basis, which if you've done so even for the last 5 years, your cost basis is still a lot more attractive than, many of those who bought, when silver crossed 30 and gold passed $1,500 an ounce. But what I really think is telling in the medium and long term is how bad the sentiment is. And that's a very bullish indicator. For example, all the commercial banks and all these people from Kitco keep saying, we expect more downward pressure on gold prices through 2014. And when everyone thinks the same, it's probably wrong.
Yeah, just like people jumping into the equities market right now when everything's at a record high.
Exactly.
What was it, that chant you learned when you're in grade 12 about investing, buy low, sell high?
Yeah,
and
but
yet
in America, we like buy high, sell low.
Yeah. Janet Yellen. Well, she's the $60 billion question or $1 trillion question, depending on who you talk to. What's she going to do in the future? I know that has a lot of people concerned. Is she going to continue with quantitative easing? Is she going to ease up on it, or taper, as they say? Or is she going to actually increase it? What's going to happen, Chris?
Well, myself and a colleague are writing a paper about the various scenarios, based on reading her papers and, her economic beliefs. And what we think she'll do is at least through the first meeting, keep everything as is. And maybe in the minutes it will have some discussions of doing some other things. But there is a point where they could actually taper back Treasury purchases because so much excess reserves have been pumped into the banking system that they could just tell the commercial banks to buy Treasuries. So it's a way of having the market think that they're tapering while still monetizing just as much debt.
This is what I wonder too, is the banks have been getting this very low, well, in the U.S., 0% interest, in Canada 1%. But consumer loans still can be expensive. Credit cards never did come down in price. Where did all this cheap money that the banks have go, or has it gone anywhere?
Well, you have to remember when QE1, QE2, QE3, and QE4, they weren't meant to spur economic growth. They were meant to keep the banks solvent. So I think that they've accomplished that goal, or will in the future, just by continually buying mortgage-backed securities and maybe even some treasuries. And remember that they reinvest all their maturing securities. So they could actually announce a tapering of buying either mortgage-backed securities or treasuries, but, actually increase the size of their monthly purchases. It depends on when they all mature. So they could definitely confuse the market, and as we've talked about, they're very big on expectations. So that's definitely a real possibility. Another thing about Janet Yellen is she's a Keynesian, new Keynesian, whatever you want to call them, and she believes in this model called the Phillips curve, whereby there's an inverse relationship between unemployment and inflation. And, the updated Phillips curve is, inverse relationship between inflation and demand. So, the more inflation there is, demand for everything will be higher, and that will, lead to economic growth. Both of which were proven wrong just in the stagflation of the 1970s.
But they want to try doing it again, huh?
Yeah, I think that's what they're going to try, and I think they might do that. I mean, there's several different ways of approaching this, but they could start charging banks interest on their excess reserves, which would be a big incentive for them to start originating loans of all kinds.
What about words? Some U.S. banks now are charging you for you to deposit money. Not even when you take it out or transfer it. When you bring money into the bank, they're charging you for that transaction. What's the deal with that?
Yeah, I don't know. I'm guessing some of the banks are still in pretty bad condition. So maybe they're trying to squeeze every last dime out of its customers as they can.
But if you lose money depositing cash, why put your money in a bank at all?
Exactly.
Or do the banks not get that? I mean, I've never understood Costco. You having to pay up front a certain fee for a membership to go and have the privilege to shop at a place. If you go to the local Safeway, they don't charge you $20 to walk in the front door. But Costco does. They charge you, $200 to walk in the front door.
Exactly. And it's only worth it, really, if you buy a lot of things from there.
Yeah, and I don't know what to do with an 89-gallon can of ketchup.
Yeah.
Make a house out of it later. Although I have to say in Vancouver, the Costco downtown is the first in the world to actually recognize that the people who live in the central core of Vancouver live in very small condos and apartments. You couldn't store that 8-gallon can of ketchup. Otherwise, you'd have to move out of the place. So they're actually selling what I call human-size items.
Yeah, I mean,
because they're living in 540 square foot apartments. Where are you going to put that extra large thing? There just isn't room.
Oh yeah, really. But yeah, so the Yellen Fed. The point I'm trying to get at as they're going to try to spark inflation. Even headline inflation beyond even the 2% mandate.
Wow. And up till now, government's been doing their best to keep inflation under control. And now they want to spur it?
Well, based on her writings and her economic views, that's what she thinks will happen. Because, as we've talked about in the past, she doesn't believe there can be excess capacity and inflation simultaneously.
Wow.
But there was, as we've mentioned, during the 70s and the stagflation, and people will just lose confidence in the U.S. dollar, after she tries a variety of things, and QE never ends, or easy money or easy monetary policy never ends. Now, I'm surprised it hasn't happened already, but a lot of Americans are just very oblivious to what's going on in the real world.
Sure, they're willing to line up for 3 days to get $27 off a microwave. That's insanity to me. What's your time worth? Obviously, to them, nothing.
Yeah, I think it goes back, since we went off the gold standard and the dollar became the world reserve currency, we've been able to inflate our way by shipping inflation abroad, and other things, as well as negating part of it by technological revolutions, like the internet and those types of things. So we've been in this 40-plus year period of good times, more or less. You take out some years in the 70s, some in the 80s, one in the 2000s. And
people just keep looking back to the Bill Clinton years, 8 years of continuous growth that had never happened before. But then he changed some of the rules too, taking away the law that kept commercial banks from being speculators. He took away that protection from the regular customer.
Yeah, Glass-Steagall. Yeah. And unfortunately, I think people think all of this will continue into perpetuity. The U.S. will always remain on top. And when in fact, it's going to be the opposite.
Wow.
I hate to say this as an American, but
you'll have to cut back.
We're digging our own grave.
Yeah, you'll have to cut back to 25 aircraft carriers at $1 trillion apiece.
Oh, yeah.
Or whatever the number is out there.
I know.
Chris, again, enjoy Thanksgiving. Sorry you had to give up some of your holiday time to chat with us, but we appreciate it, believe me.
All right, great to be back.
My guest has been Chris Marchese, mining analyst for the Morgan Report. You can send questions for him to chris@silver-investor.com. You're listening to HoweStreet.com radio. Find us on Twitter at TalkDigitalNet. You can forward your comments to info@HoweStreet.com. I'm Jim Goddard.